Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Just let you guys know it's ahead of the open, and I picked up some U.S. dollar Norwegian krona about an hour ago down here at 125. I just sold some of it at 127 and change. I'm going to keep the remainder. Try to write it out a little bit. Just depends if this risk on, or excuse me, I'm sorry, I said that incorrectly. Risk off continues is what I meant to say. So it's just, just trying to scalp around a little bit. I'm pretty. I want to say I am pretty like uninspired chasing risk lower here. That's I guess the way I want to frame it. I'm looking at stocks and I'm like, okay, I see the stock market is weak. I see that we're lower. You got the NASDAQ, that's obviously we're at the 50% retracement right now. You got the S&P that's lower here as well. It's like, okay, do I really want to chase markets down here at this support? Not really. So that's why I'm like, okay, maybe I'll just take some of the profits that I have and take them off, and as I'm scalping around. Now, obviously, if we break through 41.10, then things change a little bit. Right. So let's go ahead and write that down. Just because we know that this is really key. 41.10, and I'm going to put an asterisk here, and we have to stay bullish while we're above it. So because I just said that, what do you think is a decent trade right now based on what I just said? And matter of fact, let me do something else. Let's just, I'm going to close the rest of that US dollar Norwegian krona. I'm just going to close it. I took the rest of it off here, 27.50. Okay. I'm not going to do this, but what do you think is the, and I'm going to keep my Canadian yen, and I'm going to sell my, I picked up some dollar MEX yesterday. Damn it. Sorry guys, I'm chatting in the chat room. I closed out the dollar MEX. I'm going to tell you why I just did that. I'm going to just talk a little bit about this. I bought the dollar MEX yesterday, pretty much, well, a little lower than it is right now because it's at 91 and change. I think I bought it at 88 yesterday. So, I mean, I made a little bit, but it's nothing really, right? I just got out of all my US dollar Norwegian krona, got out of that. And I know that the S&P is at support. So it's like, if I have some profitable things, now I'm going to keep the Canadian yen because I think the Canadian yen, reversal off of the 161% extension is worth keeping. But all this stuff I'm kind of scalping around. If we're at support, do I really want to hold it? Now, if we break, excuse me, sorry guys, it's I got to sleep late last night. I had a late night meeting. Problem when you do business with Australian companies and you're on the other side of the world, you get to stay up late sometimes for meetings, and it's past my bedtime. That's why I'm yawning a lot right now. Anyway, going back to what I was saying, since I know we're at support, I don't want to really chase here. But if you really if you're at support, what's probably the better trade out there? Buy the Aussie dollar right now. We're at support. You know what I'm saying? If you're at support, just pick it up, put your stops below these lows. Because if we drop below 78 cents, it's probably bearish. I don't necessarily want to take that trade. I'm just saying that makes sense to me, right? So let's put in 78.10. I mean, that's support right now. By the way, I need to write down resistance for the S&P. So resistance for the S&P is probably any move back up to this hourly, this area right here. Previous support right here. This is a little resistance breakout point right there. So you just kind of keep it right there. That comes in at 41.90. Let's write that down. Okay, let's go back over the Aussie since I was just talking about it. So now let's say the Aussie breaks down. And let me delete this for a second. Delete this. We don't need this. We don't need that. We don't need this. But what I think we need is take this low to the high. The 38%. Oh, okay, let's change this. 78.09. So I have it at 78.10. That's fine. So next support below that is going to be 78.83 as a 50% retracement. The little spike highs right here. So I'm going to put in next to this 0.7785 is next level support. Resistance right now is obviously those highs. Remember, there was a 78% retracement right here, so it's 79.02. So, and you know, I don't think I want to put bullish. Oh, look at the euros coming under pressure. Whoa. Wow. Damn, did I just get out of my US dollar Norwegian krona way too early? Probably did. Some bitch. Sorry. Okay. Anyway.
What movie was that from? Some bitch.
Some bitch. I forget what that's from.
Yeah. Anyway.
Somebody might know. All right. Let's talk. Irina wanted to talk a little bit about the euro. So I don't really have an opinion about the euro other than, look, we're holding. I mean, while you're above 120, I don't think there's any reason to be bearish, right? But at the same time, one of the things I guess we need to point out here is we just hit a new trend high and reversed. Do you see that? And that to me is a little concerning. If I was long euros, I'd be a little concerned right now because of this. Some bitch. What is that from, Stelios?
Another lag spike. Sorry, I didn't hear.
Anyway, that would be a little concerning. The little break above the highs and then a reversal. I have like zero opinion of the euro at these levels. Let me check something really quick though. If you take this high to low, that's probably close to an 88% retracement. It is an 88% retracement. So let's just mark that up as high as resistance today, as today's high. 121.81. I mean, that was the level. So let's 21.80. I think it's bullish while we're above 120, but that doesn't mean that we can't come back down here intraday. I think the best play today would be let those stops get taken and try to get long somewhere down here. I think that's probably the best play today. So that would come down to 120.57. If you want to play into the bullish, you know, the bullish while we're above 120 play, you know, you have this false breakout, little double top here, break below there is going to take you back to the 618. I think that's how you play it. You know, cable struggling, 161% extension, 141.40. So this is 141.60. We're going to call that resistance. So, you know, this is the same type of situation. If we can break below these lows, then we drop back down to 140.20. Okay. I think you play it the same way that you'd play the euro. Like that. Like this. Now, you know, obviously if you're thinking, you know, hey, I want to play both sides of this, that's fine. Just, you know, short the cable below 141, try to ride it down to 140.20 or 30, and then for a bounce, something like that. Aussie. Now this one's a little more concerning. I'm not the cable we have to put in bullish. I'm not going to put bullish for the Aussie. The reason why is I'm thinking we might have false breakdown, false breakout. I think it's giving us a lot of false breaks all over the place. So I'd be skeptical about designating a bias to it right now. All right. Can you guys hear my birds?
Totally.
You can?
Yeah, absolutely.
Okay. Wow. Hold on really quick.
He's off to shoot them.
Can you
now,
hear the
right?
birds anymore?
Now we're gonna start hearing shotgun shots. Like, what about now?
You know, can you hear the birds now?
No.
Yes,
No,
but
I can't.
much lower in volume. It
Okay, so
wasn't bothering me personally before. I mean,
I
it's
have
nice,
this
actually.
this microphone and it's noise cancellation, right? And so I never know what is canceling what.
Actually, don't worry about it. I can help you afterwards. You can apply noise cancellation to any microphone because there is a software solution for that as well.
Yeah, I'm sure there is.
And
but
it works just fine. I mean, yeah, it's not, you know, as perfect as, but it will filter them out. But
okay,
it didn't really bother. I mean, it's nice.
got it. Okay. Hold on really quick. Let me see here. Let me go back over to the Aussie. So we have the Aussie. I think it's going to be range bound. The Kiwi is a little different story because we're in this ascending channel. I think support down here at 71.75 is going to be probably pretty important, right? And then up here at 73.50, we happen to be in the middle of the channel. So I think you could play it probably to 73. Well, I'd rather play it on a dip and be long down here at 71.75. And this would be 0.7350. And I would actually put this one in bullish where the Aussie is more in the range. But I think we're bullish while we're in this channel. Dollar Canadian still trading heavy as all get out. We have to get above 121.40 just to even have a shot at having a shot at getting us off the bearish designation. But look at how weak this is. This scares me because I'm short Canadian yen right now. Here's the dollar Canadian. This is the September 2017 lows. That's basically the double top trigger right there. So, you know, if you break that, that means that theoretically over time, we're going back to 90 some odd cents. So, I mean, the low here was 120. I think it's 120.60 if I'm not mistaken, but let me double check that. 120.61. That's the number we have to write down. I didn't think we'd be this close. Okay. Dollar Swiss. Hugo yesterday was waiting for his bounce and got a little bit of a hammer yesterday. So I think resistance will be right here. 90.80. Support, obviously, we have to write that down, is 89.85. Oops. 89.85. $90.40, right? No, I'm sorry, 90.80. My bad. And we are below the 200-day moving average. So I think, and that comes in at 90.80 as well. So we got to stay bearish while we're below that. Okay. Dollar yen. Guess what we're going to do? We're going to write 108.35. Somebody in our chat room was just saying, I'm going to try to take a long down there. Hopefully you got a long off. I forget who said that this morning, but hopefully you took advantage of that. Resistance, I think, will be right back up here at 109, because this is that wedge top breakdown, or you could say it was, triangle, I guess. So resistance is going to be at 109. And we're range bound. Okay, dollar index. We have to get above 90.45 to take this pressure off. Sorry, just taking a look at equities right now, really quick. So dollar index, maybe we got a false breakdown below these lows, perhaps. We are on the 78% retrace. I'm just going to write down support as being 90. I think it's pretty key. Let's take a look at dollar MEX, dollar Norwegian krona. So here's the krone. Like I said, I just got out of the long that I scalped this morning. I'm going to write down 820 as being support and resistance right now. And notice how we're making a higher low. Okay, so that's kind of important. And I drew this out yesterday. We might have a head and shoulder pattern inverted. Resistance right now, since this is a descending trend line. Okay, yes, we've been looking at 839, writing 839 down almost every day. I'm going to put the lower end of this now, since that trend line is descending. So it's 835 and 820. We have to still stay bearish while we're below that trend line. All right, dollar MEX. So I'm going to write down 1978 as we have been. And then, while we're below this 20 level, I mean, the dollar Mexican peso has not been able to muster up a rally. And, Greg popped in our chat room yesterday, and he made mention of that. And he made a valid point. I mean, the dollar Mexican peso is really struggling to rally now, which I'm surprised. As stocks have been weaker, it's like, well, how's the dollar Mexican peso not able to muster up some sort of rally? But I mean, look at the S&P is going to start bouncing from these levels. So I still think we need to keep it on range. I'm just not excited about the dollar max right now. All right. gold and silver and Bitcoin. So gold. I don't know if you recall yesterday, we hit higher highs. Relative strength was divergent at that time, right? So now it's reflecting, price is reflecting that. We went divergent, bullish, price action, divergent relative strength. So we figured it'd come down. Now support is going to be at 1800. Resistance is at 1845. I still think we have to be bullish while we're above 1800, especially above 1760. Actually, while above 1760, especially above 1800. But I think we can pull back here. So if you're going to play gold, probably the way to do it is, you know, wait for a dip back down to 1800 if you can. Best risk reward down there. Silver, we stopped at the 618. Because we stopped at the 618, I know Stelios doesn't want to see this, but I'm going to have to keep it on. I'm going to have to put it on neutral. It's, you know, unlike gold, that gold, you know, looks stronger. Silver's really, you know, kind of range bound here. And so I'm going to write down 2780, support being at 2660. Last but not least, let's talk about Bitcoin. Bitcoin just continues to struggle. 60K, 52.4. And I'm keeping that in range. Okay. Bias chart's finished. I'm going to pass it over to Steven Stelios.
No, thank you. We don't want you to.
Yeah.
Just keep it.
Steven, you know, just mentioned, he just made a comment really quick. Dollar yen, I'm stuck between possible head and shoulder and move down to 108, 105.80 or bounce and push back higher. Is there any catalyst or cross pairs I should be looking at for confirmation or help with direction of the pair? First of all, I'll give you my opinion really quick, and then I'll let Steven Stelios, you know, go over the dollar yen for you. Here's the thing. I'm not sold on why I should be trading the dollar yen. The Canadian yen, the Aussie yen, all these other yen pairs, I've kind of, you know, we've identified the false breakouts. Canadian yen, 161% extension. So what I'd prefer in like the dollar yen is I'd prefer a breakdown through support. One of the things that I cannot ignore is this weekly trend line that's 6 years old. We had this false breakout above the highs. Then we slumped. Now we're just consolidating around that trend line. So I think what would make me really excited is if we broke through those lows or even broke through these highs right here. So this would be, because if we broke through 109, you know, this is that 109.65, which is that 618. If you know why we keep writing it down, I think we'll make that breakout move. And I think if we break back below 107.50, then we're going to slump back towards, you know, 105 or whatever, or 105. And I think maybe that's going to be more reflective of yields, but I'm going to let the market do the talking here rather than me try to anticipate what to do here, Steve. I hope that opinion helps, but I'm going to pass it over to Steve and Stelios so they can talk to you about how they feel. So guys, I'll catch you in the chat room. And if I don't see you there, I'll see you on the daily roundup. Steve, Stelios, it is yours, guys.
Thank you, mate.
Thank you, Blake.
Thanks, guys.
I don't know what to say about dollar yen. I'm not trading at the moment. It's it will be pulled lower if we get risk off, but on the other hand, it's a tough one. Actually, I don't know. What do you make of a dollar yen, Steve? I really have no opinion on it.
Listen, let's have a look at it, and I'll tell you what my thoughts are. First of all, when we were breaking out there, I envisioned how this might go, and so far it has, almost perfectly followed what I had in mind. Now, does it mean it will continue like this? No, not necessarily. But given the fact that I think that yields are extremely likely to continue to the upside, right? It was probably, we even revisited them yesterday. This chart that we were looking for, right? What do you see here? A corrective move in yields. And going back to the yen, what do we see? A more, complex and choppy, but still likely corrective move. Now, I know that there is going to be the usual crowd that's going to say, this looks like a head and shoulders formation, not a very symmetrical and pretty one, but it looks like it. And, as always, I'm going to answer that, yeah, I guess this can be the case, although, as I said, it's not very symmetrical and it's not really beautiful. But until it breaks the neckline, I think that the path of least resistance remains higher. We clearly have, and that's what I wrote in the weekend analysis, this support area, roughly at 107.50, 107.70, and we also have this resistance area at 109.50, 60. I think whichever direction we break, we're going to see follow through. And I think it's more likely to break higher than break lower. Even if we break lower, there is still going to be the chance that we will be within a corrective move that looks like this. So I don't know. I wouldn't want to take the other side in USD yen, meaning I wouldn't want to be short. I'm not saying in the short term it might have more downside, but as long as we trade, I would have to say above 106. 105.80 is the 61.8, the 200 DMA as well. Let's say 105.80. I think we're going to eventually see higher levels. That's what I think about the USD yen.
Okay, makes sense.
And as I said, it's mostly based on the clean technical picture is in yields, which is this one. I find it extremely unlikely that yields will break to the upside, and the USD yen is not going to be more or less doing the same thing. Yeah. And seeing what the yields have done, I find it extremely unlikely that yields are going to just tank lower. I doubt it. They might spend more time consolidating. I mean, that's not impossible, right? But do I think we're going to break down from here and move decisively lower? No, I don't think so.
Yeah, actually, speaking about yields, can you have a look at the Bund as well? I'm still short that one, and I think we're getting.
Absolutely. Here it is.
We're kind of breaking out, but not quite.
I think we are at the precipice of a bad breakdown here.
Yeah.
This, unless we reverse like here and make this a descending wedge that's going to be like, trend changing. I mean, shorter because the long term, remains higher. The long term chart doesn't leave any. Here it is. Any room of misinterpretation of where is the, which side is the long-term trend. But, the shorter-term trend is clearly lower. And, this formation looks to me more likely to just break to the downside and have a more abrupt move to the downside. then reversing higher. So, and as I've said, the next downside area of support is this big channel trendline support, which passes from, what is it, 166.70. So I think, if I was short the bonds, I would still hold on to my position. There's no reason to get rid of it.
I have a target around 167, just above that line.
Yeah, I think it's perfect to take some profits there.
Yeah.
I think it's perfect to take some profits. I still, depends on how it reacts. I wouldn't necessarily take it off all off the table just because we hit that level. You know what I mean?
Yeah.
I would
half,
judge based on the price action. I might have, I might take like a third of it or half of it off. But if momentum seems to be strong, I don't think I would immediately get rid of the whole position. It would be a shame. Okay, so that's what I think about the yields. In essence, we saw both the German yields by looking at the inverse, which is the bonds themselves, and seeing the 10-year yields. And back to the DXY, it's what I was saying before. Just look how weak the DXY is. Especially considering that we for recent standards we've now had 1.5 days of a decent sell-off. Somebody would expect that would immediately trigger some dollar buying, but it really hasn't, and that's quite a worrying sign if somebody is bullish the dollar. Of course, we break through like 41.10 in the S&P, which immediately opens the door for a move closer to 4,000. The higher the chance that the DXY is going to find some supportive buying. But I still wouldn't want to take the other side of the dollar for no reason whatsoever. And here's the chart I was talking about before, by the way. Here's the clean breakdown in the S&P to Nasdaq. We were talking about that while we were still testing the support. I mean, perfect technical formation, targets levels just above 3, right? And if, as I said the other day, for those of you that really think for some reason that this move is overdone, I want to remind you the context. This is the Nasdaq to S&P chart, right? And we briefly surpassed the all-time highs at the what is known and not my expression, worldwide accepted expression. We were trading above the dot-com bubble highs, and that says all you need to know. So I think there is plenty of room for more downside, right? This is the minimum expectations of a downside. If this is a corrective pullback, but who knows? This might be the beginning of something bigger. And needless to say, that if this is the beginning of something different, I think it's a matter of time for this to spill over to the equity complex in general. Now, to be honest, I don't know why, but I haven't gone through the process of checking it. But I have a feeling, now this is interesting to do actually. Let's overlay the S&P. Oh, this is a CFD that doesn't have that much history, so it's not useful. Let's overlay then the SPX 500. SPX. What about this? Does it have? Oh, okay, perfect. So look at this, which is extremely interesting, Celio. Look where the Nasdaq to S&P ratio topped.
When was that? 2000.
2000.
Yeah.
And the markets didn't top. Look at this. We had the first sharp leg lower. In this ratio, right? And as this was happening, we still had the S&P climbing higher. And even sometime afterwards, it almost retested the all-time highs as the Nasdaq had clearly started its move lower. And how do we know this? Because this move lower, as I would have said if I was doing technical analysis for you back then, I would have said that this is an impulsive move lower. Just put it in context. Let's zoom in so you can put it in context. Look at this move. Right. And then look at the corrective move for this ratio, right? It was
so the market gave us a lot of time, right?
Yes, exactly. So I'm not trying to call a top here. You know that I'm the last person that's going to do that, because I'm the first person that always says, follow the trend for as long as there is clear evidence that it hasn't changed, right? But all I'm saying is that if at some point we get solid evidence that this ratio has indeed topped, which is still very early to say, this might be a corrective pullback, right? You should be extremely careful, because there is no way that the Nasdaq is going to consistently start underperforming, and that's not going to end up spilling over to all equity indices. Okay, that's why I'm paying so close attention to this ratio that seems like an exercise, a vain exercise to do, but I don't think it is. I don't think it is. I think this is very likely to give us a very good signal when the time comes. When the time comes. I'm not saying it's now. USD follows yields usually. USD never follows yields. USD follows real yields frequently, usually, not nominal yields. So stop paying attention to nominal yields. Nominal yields mean nothing. They mean nothing to real investors. They mean nothing to the market, right? Why would I care if the 10-year bond yielded 2% when inflation expectations have already surpassed 3%, and when buying a US Treasury puts me in several risks at the same time? One risk is currency devaluation if I'm not a US citizen, right? Risk number two, that the situation is going to get worse. Risk number three, that it's a long-term instrument, and if I really bought it to hold it to maturity, who the hell knows what happens until then? Because there are pension funds or whatever. Another thing, you have to pay taxes on the income you have on treasuries, which means that the actual nominal yield that you receive is lower than the posted one, because that doesn't include taxes. So bottom line, what I'm trying to say, even if yields move to 2.5% and inflation expectations don't get worse, just stay anchored to where they are at the moment, and you also include taxes, we're talking about all these best case scenarios I just mentioned. We're still talking about real yields at least of negative 1%, right? So yeah, the dollar doesn't care about nominal yields, neither should it. Same with the metals. They don't care about nominal yields, and they shouldn't, because the opportunity cost should be compared to real yields, because that's the only thing that matters, not to nominal yields. Nominally, I can give you 5%. I mean, look at all the failed countries, right? They have interest rates of like 15%, and still people don't want the currency. Why? Because many of them have inflations north of 20%. So is 15% yield good? It depends. It might be horrible. Let's see. IWM. Okay, let's go through some of the rest of the stuff. First of all, we've already mentioned the importance of 41.10, 41.15. There is really no big technical development here unless we break down. Now we break down from there. It's a whole new game. I think we start opening downside targets. Now, Another thing I wanted to talk about is crude. Look at crude. For the time being, it remains completely unfazed, right? So far, we had 2 doges yesterday and the day before. So far, of course, extremely early in the day, we're working on a third one, which is clearly indecision. I think the likely scenario here remains like a, bigger consolidation type of thing. But, there is also this type of scenario. So keep that in mind. And if equity indices come under pressure, this is a likely scenario to play out instead of a triangle, this big channel. That would point to a possible pullback even towards 55, right? 55, 56. So keep that in mind. Being close to the upper bound, I think that crude might be a nice way to play risk off. Sometimes crude fails to respond initially to risk off and then tries to catch up. So keep that in mind. Now, having to do with the metals, nothing has changed since yesterday. I reiterated, and I'm going to say it once again, 1850, 1855, key resistance area for gold. Would I be buying gold here for the short to medium term? No, I wouldn't. Why? Because you're not buying things on a resistance. As simple as that. Would I be buying gold here to hold for the next year? Yes, I would. Would I be buying it to necessarily hold for 2-3 weeks? No, I wouldn't. Okay, same applies to silver being at the 61.8. So keep that in mind. Platinum, nothing has changed. I still see the possibility for one more leg lower because this move higher so far is definitely, not inspiring any confidence. Palladium still consolidating its recent gains, but fails to really push lower and tells you all you need to know about this market. Same thing applies to copper. Now we had a question about the Russell, the IWM, and nothing has changed here either. Meaning, main case scenario, if you ask me, this is a symmetrical triangle. Implications, a likely breakout higher. Okay. Now, secondary scenario, some type of a head and shoulders formation. Clearly it has started losing symmetry, although somebody can claim that the shoulder is this one, the bigger one, right? In which case scenario we haven't lost symmetry. But as I've said, don't like to look for reversal formations, until something is actually triggered. Keep looking for the continuation of whatever trend, there is, if there is a trend, because there are occasions that something has no trend, in which case, in my opinion, you either trade a range or you get out of that market and do something else. The DAX, now, I'm not really sure what's happening here with the DAX, meaning, too early to know what kind of formation we have here, right? Still, most likely a corrective formation than anything else until proven otherwise. We just got JOLTS, US JOLTS openings, 8.1 versus 7.5 million. Okay, whatever.
Yeah, that's a bit of volatile and not very.
It is
dependent number, but anyway, it tells us something.
Stock indices, by the way, are still trying to recover from the lows of the day, which, if we judge from the S&P, were matching more or less the lows that we had last week. We've said many times, like 41.10, 41.15, nothing really to see as long as we trade above it. Technically speaking, there is nothing that has broken as long as we trade above that. So, don't try to jump the gun in a well-established trend, right?
Our friend Jason is asking how we track real yields. You can look at tips. You have like 5-year tips, 10-year tips.
What my problem with tips is, Stelio, I have two huge problems with tips. One, they're based on the reported inflation, which is a big problem. Two, the Fed intervenes even in the tips market, which tells me what the hell, if this makes any type of sense. I mean, theoretically,
you are right. They give you some kind of idea.
Theoretically speaking, the tips market was created for people to be able to hedge their exposure to inflation, and then the Fed goes and intervenes in that. So in essence, they even take away a market that they supposedly make to give you the ability to hedge your risk to inflation, right? So you can have a look at tips to give you a general idea and direction, but do I think this is, a very reliable thing? I think whatever you see at tips, multiply by 2.
If you're looking for a trend or something like that, then they're a pretty good solution. Like you can see
Yes.
5 tips, they've been
Yes.
grinding lower towards negative
Correct.
2% over the past few months.
Correct. Having to do with
Don't
direction, they're good.
Don't look at the absolute numbers.
Having to do with the absolute numbers, they're also manipulated. The Iran-Israeli war does not affect the oil. What do you mean, mate? If it will affect the oil, I couldn't care less. Honestly, I couldn't care less. I've seen many, many times geopolitical developments that are supposed to work one way, either not work at all, or have a very temporary effect. There is no indication more reliable than price action itself. The main argument for being a technical analyst, and this monologue comes from a person that loves economics, right, and has studied a lot of economics. The main argument for technical analysis as the main indicator is what? That whatever the market wants to price in, macro and geopolitical included, are in the price, right? So the price doesn't hide from you, whatever effect like a mini war can have or whatever, because it's already somewhat priced in, right? So I'm not saying that on occasion macro events can't really derail the markets. Of course they can, but I think there is no indicator more reliable than price itself. That's what I think. So, I see what I see. I think the trend in crude remains higher. That's without a doubt, right? The trend remains higher. I expect crude to move substantially higher, but seeing this type of formation we have at the moment, that isn't necessarily something that will happen immediately, right? It might be something that might need more time to for this corrective move to unfold before it can happen. Now, whenever you have a trend, in this case higher, there should never be a surprise if you actually break in the direction of the trend, right? So it's not necessarily the case that we need to correct more in time, although my intuition tells me that we will. That's why many people, and me included in some occasions, I don't like to trade counter trend, right? Because you take more risks, as simple as that. Unless, of course, you have a very, very attractive risk reward ratio, in which case, you're willing to take that extra risk because, you have a lot of potential benefit if you timing it correctly. Your view on LYSCF. Okay, sure. Let's have a look at that, whatever it is. Let's see. LYSCF. We had a look at it before. Nothing has changed. We had a look at it when we were back there. I said that there's a chance, we're going to move higher. And, this, if I remember right about this stock, I said that this, whatever it is, ETF, whatever it is, I said that I like the fact that it's correcting after such a huge move. I mean, it's very, very healthy that it's going through a correction. The trend remains clearly higher, but there is a chance to see more corrective consolidation before we move to the upside. As I was saying just a minute ago, though, it should never be a surprise when you have a clear trend when something breaks in the direction of the trend, meaning we might correct, for a few more weeks, but we might not, right? That's why here, if you ask me, I wouldn't take the short side of this. I mean, you have a decent chance of making some money if you take the short side of it. As we move again, who knows, towards this triangle's trend line support. But who tells you that we don't just break out from here, that this wasn't enough of a correction, and then we move to the upside? So, in my opinion, two ways you can play this. One, the safe way that gives you a worse risk reward ratio. You buy it when it breaks above the previous high. There. You buy the breakout in essence. 2, you buy there. Somewhere there. That gives you a better risk reward ratio, right? But you have less confirmation. You're jumping a little bit the gun, so you're trading off, in essence, better risk reward ratio for less of a confirmation. It's up to you. NVCR, CR. Oh, what the hell is this? What a weird market. And that spike higher was not on earnings. I'm wondering what happened.
Biotech company.
Yes, probably some kind of news there.
Yeah.
And it had this, huge gap higher, which it sustained for a period of time, as it seems. I don't know. Not a pretty thing. Theoretically speaking, we're bullish as long as we trade above there, right? Yeah, having said that, a lot of RSI divergence. I don't know. I don't feel so good about it. I wouldn't be buying it. Yes, it's bullish, clearly. But I don't think you're getting a good price, if you ask me. I don't think you're getting a good price. Yeah, I personally would stay away from this, unless I was like very certain, about like whatever the fundamentals of the company that, whatever made this gap higher happen is, a real thing that's going to have sustained, effects on the profitability of the company, so on and so forth. So whatever. FTR, FTA. Oh, that's a news, you mean? Something that had with the FDA approving some kind of a medicine for cancer, I assume. Okay. Yeah. Okay. That would make sense why we had this, big jump. Any more questions, guys, gals?
Okay, bro. That was very good.
Okay, still.
Thank you, everybody. And
BA, last one.
One more.
Okay, last one. Okay, this looks. Now, let me show you what the problem is with this. And, that's why I'm going to be filming like a video that has to do with top-down analysis. What was the name of those books, Stelio? Find Willie?
Oh, Find Waldo. Where's Waldo?
Waldo, whatever it was.
Waldo,
yeah. Okay, Found Waldo. Now, find Waldo here. Where Waldo is the trend. Where's the trend? Somebody's looking at this and he's like, yo, the trend is higher, right? There it is. There's the trend. And I would agree. If this is the time frame you're looking for, I would have to say this looks bullish, right? Here it is. Now, you apply a little bit of top-down analysis and you realize that, that's a shorter term trend, but this rebound here doesn't look that healthy to me. Let's also fib this. So short-term bullish, longer term doesn't look that good to me, if you ask me, for Boeing. This, by the way, was a head and shoulders formation. You can see it here, right? And it even fulfilled its target comfortably. Stel, you have a question from Hugo. Stel, what is your
I
favorite
already
uranium
answered
ETF?
it.
Okay.
Yeah.
Okay, so have a wonderful rest of the day. See you again tomorrow, guys, gals.
Thank you, everybody. Thank you.
Bye-bye.
Bye-bye.